Everybody, in this video we're going to review the equity, forex and commodities for the trading week starting on June the 17th, 2018. I'm Giuseppe Basile, also known as the Fib Stalker. Welcome to this week review. And before we proceed, as usual, please pause your video and read the usual disclaimer here. Past performance is not indicative of future results, and trading forex and other markets carries a high level of risk and may not be suitable for all investors. The speaker and author is merely providing this material for your general information and education. Before we proceed, I want to remind you to come and join the Modern Market Trading Mastermind on Facebook. It's easy. You can go to fibstalkertrading.com/Facebook and you're gonna get there. That's the way you get to the group, okay? And you can subscribe there. We have many units with education. We do polls. We publish charts and commentaries and actual trading opportunities for you to learn and trade. All right, so let's get into the markets, and I'm going to start from the SP 500. The SP 500 might be in trouble here. That's not the kind of behavior we like to see in this move higher. Now, for those who follow me know that we have been looking at this market pretty successfully, I have to say, since 2014 here, and we also captured the highs to highs here in October 2014, and then the highs to highs in 2015 and 2016 low, which brought price into first and second target. Now, the market never came to trade the extension long, okay? And this is the trades I'm looking for. So if we get a nasty sell-off here, out of this attempt to reach previous highs here, then 2485 might be in the cards. Okay, so that's something that you have to keep in the back of your mind, and this could be a short opportunity for the SP 500 as well. Now, what we traded in February here was an intermeasure move, highs to highs, 2537, and this could also be retested here. So this is going to be the first level being retested if we get a nasty sell here. The VIX is very low as well, but if that happens, then the possibility of touching 2485 becomes real. Okay, and as you can see here, this live data here, we are seeing weakness in this market, and we could see a continuation lower. Now, when we look at the sequence here, this is the sequence I've showed you also in the last a few weeks, and that has been our our guide here in this market. There was a traditional measure move from 2615 traded at 2680, brought price into the first target. The next measure move, and we know the SP 500 likes to move in a traditional measure move, is going to come at 2737. So even if this is just a healthy correction in the market could come down to 2737, and then we're going to see whether there's going to be a bounce and a continuation higher, or if this market is going to continue lower. Okay, so we might be in trouble here, so be very careful. And if you believe in the short, then the lows to lows here has not traded, meaning that has been pierced, but this market keeps moving lower and might become more technical going forward. Okay, so we're seeing this selling here at the Japanese Asian session here open, and so be very careful in this market. Dollar index, of course, one of the reasons for this is a strong dollar, particularly after the hawkish confirmation we heard last week from the Fed. Okay, so we have highs, two highs that never came into play. I was looking for this to come into play, but the market actually has resumed its move higher after the announcement from the Fed. They're gonna make two more hikes this year, not so four, not three, and this market then has used a higher anchor here, and that's what we're gonna use going forward. It's a weekly level from the high of 91.36. I'm gonna trace this on the daily time frame as well, so we keep that in mind. And as you can see, it has been tested, and I'm tracing this after the fact, not before the fact. The majority of our levels are before the fact, but this level here, it's not before the fact, so we use it for price discovery. But it's very, very helpful because it gives us potential targets and then continuation. In this case would be continuation in extensions. Okay, so when we look at the smaller time frame here, I'm going to use the 4-hour time frame here. There is a potential extension long here from highs to highs, and let's see if that has traded. That has not traded, so this is not what the market is using unless confirmed on Monday here. So if we get into 94.25 and this level holds, this is going to be the level where we're going to see the continuation higher for the dollar index. Obviously gold and silver have sold off on Friday for obvious reasons. And you remember that I always mention the 1257 level. It appears that now we are only 20 points from that level. Let me see if this level is traced properly. It is not, so let me show it to you on the daily from lows to highs. We had this measure move, the next measure move failed, and the market came to the market was due to trade this level. Actually the actual level is 1277.78. okay, and that's what is trading as traded already on Friday. Okay, so this could actually offer support to price, but it is very possible if the index strength continues for this level to be pierced. Okay, so where are we left with this market? We had a lower low in 2001. I do not have the data here that justify the 50%, so I'm gonna actually use this level here, and the 1133 could come into play again. Okay, we have to keep that level in mind. There's another level that I want to trace on the weekly time frame here that has not been respected before, and in this range should not be respected, but that's another level that you want to keep in mind. It's very, very close, so I don't anticipate it holding here. All right, so big trouble for gold, big strength for the dollar index, and we don't want to see a strong dollar index. If the dollar is strong, everybody is in pain, because repaying debts, especially emerging markets, costs way, way more. Okay, so a higher dollar, well, it's not good for the world. A dollar cash is also not good for the world, and definitely, but definitely that's not what we're seeing here. Silver and gold and silver are showing weakness. Look at the sell-off that we had in silver. It was almost $1 here, and we can see this market moving even lower. Though it's within this area that acted as a base now for many months. The market could break below it and look down at the 1484 level, and possibly even lower if the dollar index continues higher. Okay, so this market has not been very technical here. As you can see, it has been moving laterally a lot, so doesn't give us an edge. So I'll leave it alone when it comes to detailed analysis here. So we stick to the larger time frames. And on the larger time frames, we had these two measure moves, the 1896 and the 1735. They both have targets below. In fact, they have targets lining up at previous lows at 1470. So that's where we could see price of silver moving to in the coming days and weeks. Okay, Euro dollar US dollar has resumed its weakness here, and as we can see here, this market had tested that 50% long, and obviously it also traded the 50% short here from highs to lows, and that's what's pushing this price lower. The 50% here back at the end of last year held price higher. That level was retested a few weeks ago, and it's likely going to be retested again, 68.45. Problem is that this market is retesting the level, printing lower lows. Okay, so at this point, I do not anticipate this level holding. And as you can see, the larger time frame 75.22 as a target below, much lower, 0.5593. Big, and we see this kind of trend in all the markets trading against the dollar. So the dollar could be strengthening a lot in the coming weeks, and this would actually destroy completely the other currencies here. So debt denominated in dollars are going to become more expensive here, and this is not good for the world. Okay, so there may be tough times ahead for us as traders. We have to do our best to take advantage of these trends, but things might become very volatile here as well. So we need always to to be careful. Now the recent move lower here, if we try the recent lows here, you can see that that's not the extension that is being used by this market. So it's a jumping extension, and I'm going to use this level here. The 50% long has been pierced here, actually at the open, or even on Friday here, which is a confirmation of the fact that this participation is real, and there is no bull willing to step in front of this market. Okay, so it's possible for this market to quickly move into 0.68 and retest the 0.6850 level here. Okay, so that's what we're seeing in this market. Very, very weak open for the New Zealand dollar here, and we could even trace the extension short here. That may be the one that is in play. We can use that level, but because this market is extended, any level is going to work just fine, and it is important to be able to capture the next measure move if this market continues lower. Australian dollar, same situation, actually even much weaker than the New Zealand dollar. In fact, if you look at this correction that we had here in this market, this looks like in traditional tech analysis, this looks like a flag, even a wedge. The point, so this market never came to trade into the 50% short as the New Zealand dollar did. So the New Zealand dollar is much stronger at this point, right? And we already saw this wedge breaking down here, and certainly the 50% long is not holding here. Okay, so it's being retested again, and this time it might just give way here this week and pierced the 0.7324 on the downside. That's what we could see this week. So be on the lookout here. There are developments that could actually bring these markets much lower. And so at the moment here we have some point of reference, and there are the shorts at 0.7665 and the longs, which is not holding here, at 74.80. Now when we look at the 4-hour time frame here, we can try to start identifying a sequence which could help us in trading the continuation here, the 50% short 76.18 traded here. Of course, last week was very difficult week for trading because there were plenty of news. So this market is now being extended. So when it bounces, it could bounce back to an extension. But keep in mind that we could also need to use a lower anchor here because this market is extremely extended. So for the time being, I'm going to use this anchor here, which is the 75.32 on the smaller time frame. Of course, we are not seeing any bounce just yet. Eventually, this market will give an opportunity on the smaller time frame, but what we're seeing here, it's the same story as the New Zealand dollar, US dollar. The 50% long is being challenged after basically breaking below this wedge, and this is a very important development here. Euro also moving lower here. Last week we identified the extension short that is pushing this price lower. I think Draghi is coming to the rescue with 3 speeches in 3 days this week, so we could see some volatility here. This is the measure move that is in play. First and second target are well defined. If we get retraces within this move lower during the week, there are going to be opportunity for shorts continuation. And here at the open, we are already seeing the 16.35. The high was 16.27. Well, it's 8 pips here. But clearly the market here, it's moving lower, so keep this level in mind in case it's retested at the beginning of the week here. This could be the level that where the next move this week could start in the euro. Pound versus US dollar, we're seeing the same patterns here. Also for this market, last week we identified the potential extension short here from the previous swing low at the beginning of March, and that's what we see here on the daily with targets. First target at 130.90 area and second target at 129.93. Now in here, in this market, we have an opposing measure move which comes very close to that 130.90 level. Okay, and so if the market gets there, expect a potential bounce. Of course, the market will just continue lower. This is also previous lows here, previous support, so it could act as a support, and we have the 50% area of potential participation from smart money as well. But but there is enough room for this market basically to move 132.74, more than 200 pips here on the downside. Okay, and so that's where we could see this market moving. US dollar Swiss franc here has traded not the extension we're looking for, that was pierced, as you will remember here. Let me remove this traces. So I was looking for the extension here after the last traditional measure move that brought price into first and second target. I was looking for the highs too high, and it has traded, as you can see here. I mean, it found participation, because these levels are very important, and find participation and even offer a risk-free trade. The problem is that after that the market continued lower and went to trade a previous anchor here, which is what we are using at the moment. Okay, so the back of the bears here was broken, which means that there were no bears that were willing to pick up this price and push it down again. So bulls are in control in this market. obviously because the dollar index, the dollar is moving higher. So just a matter of in here identifying what could be the continuation level. I'm going to use the 99.42. Mind again the volatility we could have during this week due to Draghi trying to save the boats, but that's not eventually this market should continue higher. I was looking for a different scenario, also using dump money. Of course, there was a more positive scenario and a higher retrace for the euro, and a potential temporary reversal for the dollar index, but that doesn't happen, and therefore that's not what we're going to see here. Now, also Canadian dollar was an important development last week. You will remember that we are in this consolidation here, but there are two important things to remember in this market. First of all, we had participation at the 50% long here. And after that, there was an inner measure move from lows to highs here that also got participation. Okay, and so clearly there is participation from smart money here on the long side. On the short side, we had the initial move lower that happened and found participation many times in 2017 and also in 2016 and also in 2017 here. This was not strong enough to win the participation that came at the 50%. In fact, look at where the first target of this measure move was, just below price, but the bulls were clearly in control here. So I have very little doubt about where this market is going, especially now that the inner 50% that was holding before has been pierced. This was holding before barely, and now with this last wave higher has been pierced, and we have a first target which is a 133.70 here, but this market could continue and retest the 35.80. So if you're long this market, the 35.80, 35.90 here is the area where you could start encountering some resistance. Okay, but potentially this market could continue higher. Also consider the interest rate differential between Canada and US. US is now at 2%. I think Canada is still 1.25. So of course they will need to hike, and they're going to do that. But relatively, this market could still be moving higher. So the Canadian dollar could still be in trouble here. All right. Last two markets here, US dollar, Japanese yen. We're seeing the correction of the SP 500, and if that happens, I believe the US dollar, Japanese yen will also resume its move lower here. When we look at the weekly, we know we are in a large wedge on top of support. The bears were not able to hold this market. The bulls were not able to hold this market. So this market is actually in a big lateral move here, and it seems to me that these could actually break on the downside rather than the upside. As you can see here, we found participation from longs at 108.80. We have not traded the shorts at 112.37 yet. We're gonna see whether we make it there or not. If not, this market could break down as well. Now, when we look at the larger time frame, this wedge is happening on top of a 50% long. Okay, so the most obvious resolution for this sideways triangle here would be on the upside, because there was participation mid 2016, but in 2 years things can change, so we don't know whether that participation, that commitment is still there or not. We don't know what has changed, what is the money flow. Therefore we need to be always careful, but if we stick to our analysis and the rules that we use, then we have to consider a higher probability for resolution on the upside. And finally, for this first part, the US dollar Singapore dollar here, which is a proxy for the dollar index. As you can see, you know, this market is accelerating here. We are using the I'm using the extension here from the high that we saw before the move higher here to high that has held. So we can see here, you know, the 6.1% level has held it, and so this gives us targets above, which we can see when we enlarge the price here. We have a first target at 135.60, which could be hit this week, if not today, and then a second target at 136.70. And after that, we're going to trace highs to highs for a potential continuation higher. So if this is anticipating what's happening in the dollar index, then we should see the dollar index here resuming its move higher here, and that's what we're seeing with this gap higher at the open here. All right, so this is it for the first part of this week's review. Be careful, because you know, we could hit some volatility here this week. All right, bye bye now.